In this video, I'm going to show you why a 27% stock market profit sucks. I'm going to introduce you to my investing model that calculates the value of most of the stocks in the US stock market, so that at a glance you have a list of all the stocks that are over and undervalued, with the computer doing all the heavy lifting. Next, I'm going to tell you about the training course that I've developed that teaches you my investment model that returned those 27% profits. From the cradle to the grave, everything I do to pick stocks for value investing. I'm holding nothing back. We have quite a full menu, so stick around till the end of the video for all of that. I'm now going to show you why a 27% stock market profit sucks by showing you the stock charts of my portfolio and how the profits and losses developed in sped up real time, and you can try and imagine the joy and sorrow I went through. This chart shows the total returns of my portfolio, and though it ended well with a 27% profit, it's worth noticing the following. I lost money for 6 months and had to have the courage of my convictions to stick with my investments. I had to be patient to make money, 14 months. The market does not adhere to any arbitrary time frames that I may set. I was wrong. When I sold CBL in Feb 18, it was because I finally admitted defeat. It's also worth noticing how jagged the line is. The returns are really volatile. If you want steady returns every month from the stock market, I'm afraid that's not how it works. G3 was my best performer. I sold it at a 90% profit. All I can say is that it felt great to sell something for almost double what you bought it for, and that my analysis was right. It's also worth noticing that after I bought the stock, there were meaningful dips in the price that tested me, and I had to hold on through the losses. CBL was my worst performer. I lost 50% on it. That was the point where I eventually gave up and just couldn't take the pain anymore. Investing in the markets is one part analysis and another part managing one's emotions. Now, I can walk against the crowd, have my own opinion, and endure losses for a time, but I began my adventures in the stock market as a trader, and there comes a time when you have to just accept that you were wrong and accept your losses, and that's what I did with CBL. It hurt. This stock made money, 35%, but it sure tested me. You'll notice the sharp fall soon after I bought in. I learned a few lessons there. I held the stock for a good 6 months at a meaningful loss before it turned around. You'll also notice at the end what looked like 3 mountains on the stock chart. There was an element of market timing in getting out with a good profit. There was some science behind how I did that. GPS was one of the easier stocks to trade in my portfolio. Though I had some early losses, they didn't dive into the abyss, but were steady. And it turned around fairly quickly, and then I sat on reasonable profits for a good while. The challenge with this one was recognizing that it wasn't going to get any better, and that I should take profit rather than hold on for more. Picking stocks for value investing is 2 parts. 1. Quantitatively finding stocks that are undervalued. Then 2. Qualitatively deciding if they are worth investment. What that means is the quantitative part is a calculation that requires little to no judgment, while the qualitative part follows a number of broad principles, but it's not something that would be easy to program a computer to do. For the first part, I have built a model in Excel and Python that calculates the value of most of the stocks in the US stock market. I say most because if the company has a total value of less than 500 million, I don't care about it. It's too small to invest in. For the second part, I have a clear approach and guidelines of what to invest in. Following on from that, I have guidelines of when to buy and sell. To summarize, my investment model is split into 3 parts. 1. Collect the data. 2. Do the valuation of the stock market based on that data. And 3. Qualitatively analyze cheap stocks to see if they are undervalued and worth investment. I've developed a detailed training course that teaches you my investment model that returned those 27% profits using value investing in the style of Warren Buffett. I'm holding nothing back. I'm showing you everything from the cradle to the grave. So in the course you will learn how to collect data to analyze thousands of stocks using the Python programming language. And if you don't know coding or Python, don't worry. I'm going to give you a crash course teaching you everything you need to know to get this job done. You will learn how to build a valuation model that calculates the value of thousands of stocks at once, so you can tell if the current market price is expensive or cheap. You will learn how to analyze a cheap stock to see if it's worth investing in or if it's cheap for a reason and should be left alone. And finally, I'll discuss when to buy and sell. This is a lot like hunting a wild animal. You have to wait for the right moment to take your shot. I can be a guide. I'll be selling subscriptions to elements of my investment model, as well as selling the investment training course. Each part of my investment model feeds the next. So the data you have collected feeds the valuation model. The valuation model then feeds the qualitative analysis. Now, if you decided to learn my investment model, you might decide that you don't have the time to collect the data of thousands of stocks. But if you had the data, you could update the Excel valuation model and analyze the companies for yourself. For that, I have you covered. I will be selling a monthly subscription, providing you with the data you need to update just the valuation model. Or say you don't have time to collect data or update the valuation model. But if you had a list of undervalued stocks, you could analyze undervalued companies for yourself. For that, I have you covered. I'll be selling you a monthly subscription, providing you with the valuation model updated with the latest data. Or say you don't have time to harvest data, update the valuation model, or analyze companies. But if you had a list of undervalued companies with analysis of whether they are undervalued or not, that could be useful to you. I have you covered. I'll be selling a monthly subscription, providing you with the fully updated model with analysis of undervalued companies. I must add though, I am not providing investment advice. Not saying what or when to buy and not saying what or when to sell. You take full responsibility for the investment of your funds. So sign up for my investment course at GetRichSlow.net and stick around for the next video where you will discover the power of compound interest and how you can go from broke to retired in 10 years.